Hello everyone, a hearty welcome to our YouTube channel CA Sansaar. I am Mona from CA Sansaar and today we are going to talk about GST annual returns, major changes in year 2024 to 2025. It's a pleasure to welcome Miss CA Leena ma'am. Thank you ma'am for joining us today and giving us your valuable time. Before we begin, I request all my viewers to like, share and subscribe our YouTube channel and hit the bell icon for the latest updates. Now I invite Miss Leena ma'am to share his thoughts on today's topic.
Thank you, Mona, for this wonderful welcome and introduction. I'm truly honored. And I also take this opportunity to thank CA Sansaar for allowing me to be on their esteemed portal. Now, as Mona said, today we will be discussing the major changes in the annual returns for financial year 24-25 onwards. Okay, so all of us know that Section 44 mandates filing of GSTR annual returns in GSTR 9 and 9C. For both these forms, the due date is 31st December, following the end of the financial year to which it pertains. Uh, GSTR 9 is nothing but a summary of all your outward and inward supplies, taxes paid, ITC claimed. And GSTR 9C is a self certified reconciliation between GSTR 9 and your audited statements. Now, there's specified turnover limits for these that GSTR 9 is required to be filed if the turnover aggregate turnover exceeds 9 crores, and GSTR 9C is required when the aggregate turnover exceeds 5 crores. Most of us have been filing these returns since the inception of GST, and it has become sort of a routine exercise. We exactly know the steps that needs to be undertaken before we finally upload the form. However, for financial year 24-25, GSTR annual return is not going to be business as usual. It is not going to be the simple compliance exercise we have been following so far. Why? The reason is that by notification number 13 of 2025 and 15 of 2025 dated 17 September 25, uh, the CBIC has introduced some major changes in the GSTR Form 9 and 9C as well. This is going to change the way we have been reporting. Now, these changes or amendments have been discussed in your notification number 13 of 25 and 15 of 25. Both are dated 17 September. Subsequently, CBIC has come up with an FAQ dated 15th October 25, wherein a lot of these queries have been dealt with and explained. And the updated forms are now available on the portal. So today we are going to discuss what are these major changes that we need to understand before we undertake the exercise of preparing our GSTR 9. Now, the major changes in, I'll just touch upon the headings before we delve into the details of each of these. Changes that we're going to be discussing today are relief to small taxpayers, mandatory GSTR filing, ITC reporting changes, reclaimed ITC reporting, expansion of table M, then reversals of ITC, new import disclosures, and auto population of figures. And we'll also touch upon the changes in GSTR 9C. The very first thing that we're going to discuss today is relief to taxpayers. Notification number 15 of 2025 has clarified that financial year 24-25 onwards, small taxpayers will be exempt from filing their GSTR 9. Who are these small taxpayers? Small taxpayers are persons whose aggregate turnover does not exceed 2 crore rupees. Now, you might ask me that what is the change? This was there in last year and the year before as well. How is this an amendment? This is an amendment because so far these exemptions were an annual exercise. Each year there is to be notification exempting filing of GSTR 9 for small taxpayers for that financial year only. Subsequent financial year automatically never got covered. So each year we'll have to wait for notification. We would wonder whether the turnover limit would be the same, would it be increased, would it be decreased. All these uncertainties have been done away by notification number 15, which says that henceforth, if your aggregate turnover does not exceed 2 crore, you are not required to file your GST and then you need not wait for annual notifications. The point over here to be noted is we are talking of aggregate turnover. The same was the condition in past years as well. Aggregate turnover will include your export supplies, exempt supplies, and supplies under the same pan all over the country. So, what I mean to say is that suppose a business person has 5 GST registrations and the turnover in each of these registrations is less than 2 crore, but taken collectively, if it's under the same pan, the turnover exceeds 2 crore, then one will not be able to take the benefit. But this condition was there last year as well. I've just briefly touched upon it to make things more clear. Another important thing about, and one of the most important things rather, I'd say, about this year's GSTR-9 is that it is auto locked. One cannot just one fine day decide, I want to file my 9C, I'll download it from the portal and start filling it. No. The precondition for unlocking your GSTR 9C financial year 24-25 onwards is that all your GSTR 1, 3B quarterly returns need mandatorily be filed. If you've missed out even on a single return, the lock to GSTR 9 will not open, it will be disabled. The reason for this is that in current year's 9 and subsequent years also, a lot of figures will auto populate from your returns. So, till the returns are completely filed, the 9 will not be enabled. Now, these are the two changes that have happened outside the return. Now, we come into the changes in the return. Now, in the return, meaning the form GSTR 9, but in the reporting itself has undergone a major sea change. This might become a little technical, so I would request Mona to kindly open up GSTR 9 for ease of understanding. Yes, so when we're talking of GSTR 9, we will go to table 6. Now, table 6 is where major changes have happened. The ITC reporting. Now, table 6, as you can see, pertains to details of ITC. This table was there earlier as well, and table 6A auto populates the ITC that you have claimed from your GSTR 3B. Now, when these figures will remain the same for this year as well. Under this table, there has been introduction of two new tables, 6A1 and 6A2. Now, 6A1, if we read the table, it says ITC pertaining to preceding financial year, availed in this financial year, other than ITC reclaimed under Rule 37 and 37A. This table was not there earlier. First things first, this table needs you to report figures of ITC of last year, which you have claimed this year. And the only thing you have to keep in mind is that while reporting this figure, if it includes any reclaimed ITC, which you've reclaimed under Rule 37 or 37A, that need not be reported here. Now, what happens when we are filing our 3B? A lot of times, your ITC of 1 year is claimed in another year. Till last year, this was included in your table 6A. The problem with this was that there would be invariably difference with the 2B and 3B figures, leading to queries from the department. Invariably, the answer would be that this is last year's ITC which I've claimed this year. So, to reduce litigation on that point, this table 6A1 has been introduced. That last year's ITC that you're claiming this year to be reported separately so that there would be no confusion on this point. However, we have to be very careful with the wordings. It says that last year's ITC accepting reversals reclaimed under Rule 37 and 37A. Rule 37 pertains that when you've purchased any goods and you've not made the payment, goods or services for that matter, and you've not made the payment within 180 days, Rule 37 requires you to reverse the ITC that you've claimed on account of acquisition of those goods and service, and they will be claimed subsequently when you've made the payment. We report the same in table 4B1 of 3B, which we in our day-to-day language refer to as temporary reversal. Rule 37A is also another temporary reversal, wherein it is required that if you've acquired goods service and the vendor has uploaded GSTR 1 but has not uploaded 3B. So if he has not uploaded 3B, not made the tax payment, you are required to reverse it under table 4B1 of 3B and reclaim it again when you subsequently the vendor files 3B. So these two temporary reversals are also included. Now, Table 6A1 says that these reclaimed ITC will not be reported in 6A1 if it pertains to last year, even for the that will be reported elsewhere, which we'll be talking about briefly. But 6A exclusively ITC of last year, accepting reclaimed ITC under 37 and 37. And 6A2 is the difference between 6 and 6A1. That means essentially it is ITC of present financial year. Now you would ask me, then what about the reclaimed ITC? Very conveniently, I've told you that we'll not report it in 6A1. Where do we report it? That will be reported in table 6H, which heads amount of ITC reclaimed under the provisions of the Act. This has been clarified in the FAQ released in October that 6A1 will only relate to ITC other than reclaimed ITC. The reclaimed ITC of last year, along with the reclaimed ITC of current year, both will be reported in table 6H. So these are the clarification as far as last year's ITC is concerned. Another change that has been brought about in ITC reporting is expansion of table 6M. Now, expansion of table 6M when I'm talking about, one second. Yes. Earlier we'll again go back to our GSTR-9 form. Earlier table M used to read ITC availed not reported elsewhere. Presently it reads ITC availed through ITC 01, 02 and ITC 02A. That means 6M, which was earlier merely a residual table, has now become a table for reporting ITC that has been availed through ITC 01, 02, and 02A. What does these forms relate to? ITC 01 relates to ITC claimed on stock when you obtain a fresh registration. And ITC 02 and 2A pertains to ITC which is claimed, which becomes a part of the taxpayer's claim by virtue of a business reorganization, be it amalgamation, merger, demerger. There were no columns or tables for separate reporting of these kind of ITC. They used to, of course, be reported in the table M, but there was a segregation, of course, leading to notices because there would be no clarity. So 6M will now give more clarity. These are the major changes that have been brought about in Table 6, which pertains to details of ITC. That means ITC reporting has become now far more detailed in as much as we are required to report last year's ITC. We are also required to report reclaimed ITC together with the current year's reclaimed in Table 6H, and Table 6M requires us to report ITC pertaining to arising from ITC 01, 02, and 02A. Apart from these changes, table 6 has been kept as it was. Another change that has been brought about in your table 7. Table 7 pertains to ITC reversed and ill eligible ITC of financial year. That means it is nothing but a consolidation of your 4B1 and 4B2 of your 3B, the reversals, the temporary and permanent reversals for the financial year. Earlier, there was one column we used to report the common figure. Table 7 has now been expanded to include rule-wise reversal. There are separate column for ITC reverse because of Rule 37, ITC reverse because of Rule 37A, ITC reverse because of Rule 38, ITC reverse because of Rule 39, 42, 43, even blocked credit. That means till last year, we used to have a common figure, this are my reversal finished. But no, presently, you are reversing a certain figure. You need to give a complete breakup. What are the temporary reversals? What are the permanent reversals? In fact, not only temporary and permanent, even if it's temporary, whether it's under 37, whether it's under 37A, ITC under 38, that is ITC banking 50%, ITC 39, ITC and then block credit separately. Rule 40 to 43, that means if you have mixed turnover, you need to reverse ITC. That needs to be reported separately. So this essentially means that your reversal figure needs to be completely and thoroughly examined, rule-wise reversals to be computed, understood, and then only can you fill up these returns. I cannot stress this point enough to say that complete documentation needs to be maintained because annual returns are the base on which investigations and scrutiny are carried out by the department. So accurate, near accurate reporting is of utmost importance. So these kind of reporting will require definitely a lot of documentation and reconciliation before we start even filling up these forms. So these were table 6 and 7. Now, some changes have also been brought about in table 8. Table 8 relates again to ITC, other ITC related information, in which a new table 6H1 has been introduced. If I just read the heading of 6H1, it says IGST credit availed on import of goods in next financial year. So what happens when you import goods, you pay IGST, you are claiming ITC. We used to report this in table 6E, which reads import on IGST. Now, it may happen that you have paid and you're claiming your ITC, but maybe you're not claiming the entire ITC in 1 year. You're splitting it up in 2 years. If that be the case, over here you're required to report ITC that you're going to claim next in table 8H1 and ITC for present in table 6E. That means for import credits, there is required to be a complete reporting of ITC claimed in present year as well as subsequent year. Thereafter, these are the table 6M we've discussed, table 6H we've discussed. Rule wise reporting of table 7 we have discussed. Okay. Apart from this, table 10, 11, 12, the changes are more or less cosmetic. One change that I would like to discuss in regards to this is table 12 and 13 have now become mandatory. You need to report these. You cannot skip. They're not optional any longer. Yes, table 9 is, there's one more change that I'd like to discuss in table 9 as well. If you would see table 9, it says tax payable, tax paid through cash, tax paid through ITC, total tax, and difference between tax paid and payable. This is a new feature that has been added this year, wherein a complete clarity regarding tax payable remaining at your end needs to be reported. And once you've reported, obviously you've accepted. So that was not there earlier. So one needs to understand what are the DRCs issued, what are the SCNs, and the payment is something that you're going to find a DRC 03 payment needs to be made, which also needs to be reported. Uh, so that was table 9. As I told you, 10, 11, 12 are cosmetic changes, 12 and 13 are mandatory. One important last change that I'd like to talk about is table 16, late fees table that comes under table 19. Now, GSTR-9 of this year clarifies that late fees will be in relation to both 9C. That means if you've paid your filed your GSTR-9 on time and you've delayed filing of 9C, your late fee will be chargeable and it will auto-populate. Reason being that annual returns collect, if that is if you're required to file 9C. If you're not required, then of course this does not apply. In that case, only in delay in GSTR-9, whatever late fee is payable would auto-populate in your table 19. One another important thing that I would just like to quickly touch upon is that table 4, 5, 6, 8, and 9 will have auto-populated figures which we need to match with our books, of course. And earlier, these were only emanating from 2B. Now, your GSTR 1A amendments were most of the times not included. Now, your auto-populated figures will also include your GSTR 1A amendments. So, these are the major changes that have been brought about in your GSTR 9. In your GSTR 9C, also, some changes have been brought about, and that is mainly in terms of reporting of supplies made through ECO, e-commerce operator, wherein the ECO is required to pay tax. That means in today's era of digital marketing, e-commerce, e-business, a lot of people are selling goods online through Amazon, Flipkart, whatever. So if you are making supplies through e-commerce operator, and the e-commerce operator is required to pay tax, you need to report those supplies in your GSTR-9 return. Just because the ECO is making payment of tax, one does not get exempt from the liability of reporting these. We are required under the new 9C. These figures are also required to be reported. So these are the major changes that have been brought about in the GSTR 9 9C. I have prepared a PPT briefly touching upon and explaining these changes. But what I've discussed is, of course, uh, a bird's eye view, a very brief manner. While we start filling up these figures, one would realize that a lot of working goes into it, because it is no longer a routine compliance return. It is a macro level reporting wherein proper figures need to be reported, and these figures need to be arrived at a proper looking into your books, proper documentation and reconciliations. If there's a difference in the populated in your figures, all these exercises need to be undertaken to enable us to file these returns. So this is all from my end presently. If there are any details or queries, please feel free to reach out to me. So,
Thank you so much, ma'am, for explaining it too well. As I told my viewers earlier also to like, share, and subscribe our YouTube channel. Thank you so much, ma'am.
thank you, Mona, and thank you, CA Sansaar. And I hope I have made it clear enough and explained the amendments. Thank you.
Yes, ma'am. Thank you so much.